President Trump's bold new move, a 125% tariff on all Chinese imports. This unprecedented move has sent shockwaves through the global trade community. This is part of his reindustrialization plan aimed at boosting American manufacturing. The idea is to make American-made goods more competitive by making imported goods significantly more expensive. Now Trump didn't stop there. He has a multifaceted approach to this trade strategy. He also announced a 90-day pause on tariffs for most other countries, setting their rate at 10%. But Canada and Mexico aren't so lucky. They are facing up to 25% tariffs due to separate fentanyl smuggling directives. This move is part of a broader strategy to address the opioid crisis, which has been a significant issue in the US for years. China didn't take this lying down. They responded swiftly and decisively. They slapped a 50% retaliatory tariff on US goods, targeting key industries like agriculture and technology, filed a complaint with the WTO, arguing that the US tariffs are a violation of international trade rules, and called for emergency talks. These talks are expected to be tense and could shape the future of global trade relations. This has sent ripples through the global economy. Markets around the world are reacting to this news in various ways. Interestingly, the US markets reacted quite positively. Investors seem to believe that this move will benefit American companies in the long run. The S&P 500 surged by 9.5%, marking one of its biggest days since World War II. This is a significant boost for the US economy. The Dow Jones shot up nearly 3,000 points, reflecting investor confidence in the US market, and the Nasdaq jumped 12.2%. This is particularly interesting because tech companies often rely on global supply chains, but not everyone is celebrating. Some analysts are warning that this could lead to long-term economic instability. Some European markets actually fell after China's retaliation. Global reactions are mixed, with some countries fearing the impact on their own economies. The EU has retaliated with 25% tariffs on 21 billion euros of US goods. This could escalate into a broader trade conflict. South Korea welcomed the reprieve but emphasized the need for quick negotiations. They are keen to avoid being caught in the crossfire. Brazil is ready to negotiate but will reciprocate if necessary. They are closely monitoring the situation. Canadian PM Mark Carney called the pause a welcome reprieve. However, he also stressed the importance of long-term solutions. The US administration stands firm. They believe this strategy will ultimately benefit the American economy. Treasury Secretary Scott Bessent says this is a deliberate strategy to pressure China into making concessions. Commerce Secretary Howard Lutnick supports the decision, but there's controversy too. Critics argue that this could backfire and harm American consumers. Trump's Truth Social post, encouraging stock purchases, has raised ethical concerns about potential securities law violations. And let's not forget other executive orders aimed at boosting energy production by deregulation and changing the federal definition of a showerhead. These moves are part of a broader strategy to reshape the American economy. All this raises concerns about a new trade war 2.0. Are we heading into another economic Cold War? The stakes are incredibly high. The future of global trade relations remains uncertain. This could lead to significant changes in how countries interact economically. The potential for global inflation and economic instability is real. Businesses and consumers alike are bracing for impact. So what do you think? Is the world gearing up for another economic Cold War? Drop your thoughts in the comments below. Your opinion matters, and we want to hear from you. Thanks for watching, and don't forget to like and subscribe for more updates. Catch you next time.